The only thing that's 100% certain in my analysis, Leia, is that fiat currencies will continue to debase on an accelerated basis. For that reason, you need to own protection against that. Now, you could argue, is it an inflationary expectation? Well, the truth is, even in a deflationary environment, fiat currencies will continue to debase. So I don't care whether it's inflation or deflation. It's protection against the certainty of fiat debasement. That's a very, very important context, because every single fixed income instrument in the world is a fiat contract. So essentially, you own a contract that is guaranteed to debase in value. Wow. Given that global debt is the largest financial asset out there, it's a certainty that that financial asset will continue to debase over time. It blows my mind that people haven't done the math, but clearly a lot of people have not done the math.
Hey guys, welcome back to Library of Wealth. Today we have former hedge fund manager Greg Foss on how Bitcoin should be used in this current volatile market. Foss believes Bitcoin is actually credit insurance, which is virtually the same as a credit default swap, but people in places like New York and Wall Street are trading as a risk asset or in association with the S&P index. But in time, the world will also consider Bitcoin to be credit insurance as well. Let's listen to Greg Foss as he explains exactly why there's a financial Ponzi going on today. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
In a nutshell, from my perspective, I believe Bitcoin to be credit insurance. I believe it to be essentially the equivalent of a credit default swap. Now, I don't want to get too granular with your listeners, but it's effectively purchasing insurance on a basket of fiat currencies. And I can value that using credit default swaps on sovereign nations. This is the gist of my thesis, that Bitcoin should be thought of as credit insurance. Now, Wall Street has not agreed with that yet. They've decided they're going to trade it like a risk asset, and all the algos in New York are going to trade it in correlation to the S&P and the NASDAQ. But over time, as big money becomes smarter, and it takes time for big money to be smart. Most big money is stupid as a post, okay? Including lots of Canadian pension funds that, for example, just off the, on the topic, one large Canadian pension fund that invested in Celsius Network, seed capital round, or Series B, before coin. This is the mark of a very foolish asset manager. But the reality is they exist all over the world, these types of asset managers who do traditional things and don't study things that hard. They're staffed by, some old fat white guys like me. And at the end of the day, they are lazy. They're intellectually lazy. So it takes time to teach the world new tricks.
Foss says the issue with the Fiat Ponzi is that it begins with a commercial banking system. This is because for their capital base, they're being levered up to 25 times. In a nutshell, commercial banks are requiring inflation so that their collateral will be able to escalate in value to recoup their decreased capitalization. The fiat system has commercial banks that need to have a massive quantity of leverage to collect proper returns for their equity holders.
The problem with the Fiat Ponzi starts with the commercial banking system. And the reason that's a problem is because commercial banks are 25 times levered to their capital base, which is to say that for every $100 of loans a bank makes, only $4 to $6 is equity capital or risk absorbing capital, and the other $94 to $96 is your depositor's money or subordinated debt. So how often do you think a bank makes a loan and the value of that loan declines by more than $6? Well, it happens all the time, okay? If you've ever traded debt, which I've done for 35 years, you know that the prices of bonds fall by far more than $6 over the economic cycle, whether it's because of credit risk, primarily because of credit risk, or it's because of changing interest expectations on behalf of the central banks globally. Bond prices are volatile. Very simply, Leia, commercial banks need inflation in order for their collateral to increase in value to compensate for their capitalization. That is the Fiat Ponzi in a nutshell. After 35 years, I finally found Bitcoin. Bitcoin is the only digital asset that solves the Fiat Ponzi. Very simple. And by the way, there was nothing coercive there. It was a bit of a tongue in cheek. Yes, this is the commercial banking system, but the reality is Henry Ford said the same thing about 100 years ago, right? He was quoted as saying, if the average American understood how the commercial banking system works, there'd be a revolution in the morning. So, it's a fact of the structure of the fiat system where you have commercial banks that need to have an incredible amount of leverage to earn proper returns for their equity holders. It basically puts the system at risk of cyclical failure. And notice that the first one, 1988, was followed 10 years later. 1998 was followed 10 years later. 2008 was followed 10 years later. 2020. Okay. The depths of these crises get more severe because the central banks bail out the system and kick the can down the road. And consequently, we are in a spiral, a DEBT spiral that can never be repaid, and thus currency debasing is 100% certain. Because I believe every single credit manager in the world needs to own Bitcoin as insurance on the credit portfolio, meaning on the fiat Ponzi. Okay, so I wrote those thoughts in an article. That's one of the reasons I got invited to speak at the first Bitcoin Miami conference, and it was well received. But it was written, and I wrote it on purpose for portfolio managers, credit portfolio managers, who are a weird bunch. Okay, we're a bunch of square pegs in a round hole a lot of times, but at the end of the day, they said, can you write it in layman's language? And I partnered with the group at Looking Glass Education to do that. We did the first article. Again, it was quite well received, and we said, well, why don't we do this on a regular basis? Because if they taught you that the fiat Ponzi existed, no one would deposit their money in the commercial banks, would they? They'd be like, okay, I'm teaching all these kids through university that they shouldn't trust the financial system. Oh my goodness, that destroys the fiat system itself. So they can't teach you. And the places that we're seeing it catch on right now are parts of the world that are non G7, right? It's the G7 countries that run the world. They run the education system in the G7 countries, but you're seeing it actually catch on in the less privileged countries of the world where reality can be taught, but you can't learn this in Britain. All right. As soon as they taught you this in Britain, your famous Bank Street would go out of business. Okay. So, it makes sure that we know what the incentives are to teach the truth. I believe that Bitcoin should be inversely correlated to risk markets, meaning as equity markets are tanking, Bitcoin should actually have a bigger bid because it's insurance. It's like fire insurance. And right now, the fire is on our back porch. And the price of fire insurance has actually gone down. It's a beautiful thing. Doesn't make sense, but not all markets make sense. One of the things about Bitcoin or about trading in financial markets, and we just cut out, hopefully I'm back. One of the things you can make a price prediction, but not a time. Okay. So over time, I know what price I believe Bitcoin goes to, but I can't tell you when, or it would be foolish for me to predict an exact time. All I do know is these 10-year cycles are getting more severe and they're getting more compressed. So I would say, knock on wood, I hope I live for the next 20 years. I believe it will be within my lifetime. Thank you for that. I believe it'll be within my lifetime. I have talked about a price target I have, and it's a very rational price target, in my opinion, which is over $2 million US per Bitcoin in today's dollars. Is it 100% certainty? Not in the slightest, but the market is currently pricing it at such a low probability that I have the correct price target that I'm like, hey, ship it in. I think my odds are way better than the odds that the market is giving me for that potential outcome to come true.
Foss notes that less privileged countries are the only areas in the world where it is being taught to distrust the financial system. He also believes that Bitcoin should be inversely coordinated to risk markets, which means that as equity markets are dropping, Bitcoin should have a larger bid because it's insurance. One thing about Bitcoin and the financial markets is it's impossible to make a price prediction. It would be imprudent to forecast a precise time because 10-year cycles are getting increasingly critical. These cycles have also been declining as well as drawing closer together. Do you guys agree with Greg Foss's opinion that Bitcoin is impossible to price predict? Let us know in the comments below. Thank you so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.